All right. So today we have our team here. We have Patrick, we have Doc, and Punk. So we have different type of trading strategies here. So we're gonna go over how to handle a day like yesterday. So yesterday we saw a big sell-off in the market. The futures were down 5% in pre-market, and then the kind of market bounced a little bit back. And today seems like to be positive. So what we're going to do today is we're going to show you how to leverage some of the data sets that we provide to be able to prepare yourself for a day like yesterday. And then we're going to pass it on to Doc and Punk that are going to show you from an options seller perspective, how can you manage the day like yesterday, what type of information you look at. And then we're going to look at from a scalping perspective by looking at Patrick's roadmap and strategy on how you can prepare yourself for a day like yesterday, if you are scalping or if you are a directional trader. But let's start basically looking at the data. So first of all, can you predict the future? Can you predict like a day like yesterday? The answer is clearly no. But how can you use the data to kind of like understand, hey, why is there a shift in the market? What's going on there? So let's look at some of our charts, some of our models, right? So the first step we want to do is let's look at the data from a few days ago. So we start with the matrix, and we open up the SPX data. So the matrix is essentially a dashboard that will look at all the option chain and will show you how the market kind of like is positioned on any given day. So if we look at the 31st, so a few days ago, you see a lot of green bars here. Let me open it up. So the first thing you want to look at is the top here. You want to see the total exposure. Whenever you see green, it means that JAX and DAX is positive. So whenever you see a green total exposure, it means that we are in positive gamma. We're going to explain that in a second, what that means and how you can prepare for that. You also want to look at the different kind of like data. So how did the JAX change over one day and the DAX? So we see an increase in positive gamma compared to the previous day, as well as increase in positive gamma, positive delta compared to the previous day. So overall, this was the 31st, right? So what I did here, I went into the matrix, I went back to July 31st, but let's go back to the 1st of August. So the 1st of August, we see a completely different picture. So like a few days ago, we see like now we are a strong negative JAX. So from one day to the other one, we see like a complete shift in the gamma. Delta is still positive. And then you can see basically how the JAX change over one day and the DAX change as well. So we see the shift there. Then we can also go to the next day and see how that changes too. So we go on August 2nd, right? So let's go back and see here. So now we are very, like this value is actually going down again. You can see how the different expiration are in negative or positive. You can see the data and you can see the different levels here as well. Then we can look at other things. So let's go to our swing trading model, right? So let's open it up and let's combine a few data sets. So let's go back to the 31st. So for those who are not familiar, basically the swing trading model was introduced in the middle of July. And essentially what the model is giving you is a price volatility band for the next 5 days. It also gives you a directional bias. So whenever you see a green lower band here, we are actually bullish bias by looking at different algorithms like gamma, delta, and other option metrics, as well as momentum. So on the 31st, we see that the lower band is 5,400. Then we have a risk trigger of 5,628 with the bullish directional bias. But then we move to the first, and then suddenly the picture kind of changed. So we see that now we have an upper band with a red line here, which is a shift in bullish to bearish bias, right? So now we're seeing a bearish bias there. We are also basically looking at the 2nd of August here, and we see kind of like the same story. So we're still in a bearish bias, and then we can move to the 3rd, and we see basically now we are again the risk trigger moved down all the way below 5,000. Another thing we can do is we can look at the skew. The skew is our risk reversal skew, so it's looking at the volatility of the 25 delta calls and the 25 delta puts. So obviously we want to measure the spike in volatility, meaning that the puts are becoming more expensive. So that means that the market is buying more puts than calls for the 25 delta, so out of the money puts. So as you can see here, if we go back to the first, we see kind of like a shift towards kind of more the call side here. But then if we go back to the second, we see an increased spike in put volatility at the 25 delta. So out of the money put are actually becoming more expensive than out of the money calls. So the market is kind of like really starting to protect themselves on those out of the money puts. The next thing we want to look at is the main chart. And this is a very, very important tool that we can leverage. So first of all, the main chart shows you at the top side the levels, so core resistance, put support. In the middle section, we see the implied volatility. So we see also that there is an increase in implied volatility versus historical volatility. We also see the IV rank here. But the very important part is this lower part of the chart. So let's go and let's look at it in more detail. So here what we see is the historical net gamma exposure and the historical net delta exposure. Then we see the forward-looking net gamma exposure and the forward-looking net delta exposure for the expirations in the future. So whenever we see kind of like this going below zero, you can see how kind of like that kind of like predicts kind of like a down move. So whenever the jacks and the decks start to shift towards the downside, we see also that the price start kind of falling. So again, this is another good metric that you can use to understand how the market kind of like is positioning itself and what's going on there. So I'll pause there and let's see if we have some questions, and then I'm gonna pass it back to you, Doc and Punk, to see how you are looking at that and how you kind of position yourself yesterday.
I have a question for you, Fabio. If we have no questions from our community.
Yeah. Not yet.
All right. So can you tell us some easy steps? So people always loving routines. So you was going through many steps to show us how we can read this and how we can predict this. But for a daily routine where we can have maybe less than 2 minutes, what you would say, what we should do, what should step 1, step 2, step 3, only simple 3 steps. So that we can looking what was happened in the past, what has happened now, that we get a clear picture, that we get only a feeling. So remember, so for us it's really important, and I think for every trader, to get a feeling for the market, what's going on in the market, especially when you came maybe now from holidays. We have summer, you was in holidays 2 weeks, you have no idea what's going on. To go easily in our board and get really fast some overview what's going on.
Yeah. That's actually an excellent question, Patrick. Thank you. So the first step, I would say that if we go to the bot here and we go on the left-hand side, and let's look at the SPX, for example. So on the left-hand side, obviously you guys can use the bot, but we also have channels that auto-populate every day with data. And the order of the data is actually intentional. So we don't just post charts, but we actually post it in a way that you can use it to follow a routine. Exactly like what you were saying, Patrick. So the first step when I log into the morning is I would look at, okay, let's look at the data. Let's start from the SPX. We can also do it on stocks and futures. But essentially what you want to see is a snapshot. Okay, this is like liquidity snapshot. So what's going on today? What's the expected move for the day? Are we in positive or negative gamma, right? So condition of gamma, this is going back August 1st. Is the momentum bullish or bearish? This looks at technical analysis, moving averages, crossovers. What's the implied volatility versus the historical volatility, right? What is the IV rank? Then I want to look at again, my main chart, the tool that we showed you, to understand, okay, so how is the historical jacks? What is the market? Like, where is there a high, like, jacks in the near expiration? So like in this case, we can see that the market is really, like, there's a lot of large positive jacks in that expiration there. Then we want to look at information here. So this is a table with all the key information. So open interest, put open interest, put core ratios, how much jacks is expiring. Then I can open up my levels. So I can go on my trading view, and I can actually look at my levels here. So for the day, you can prepare yourself looking at what are the levels for the day. Then I can actually look at positions. So this is a very important chart. So it's the net gamma exposure for all expirations here. So first you want to see, okay, on August 1st, we still had a lot of bullish positioning on these strikes here, but we started seeing like piling up some bearish positioning here. You also want to see, and Doc is going to explain more on maybe this one, you also want to look at different expirations, right? So based on your time horizon, so if you're a day trader, then you might want to look at 0 DTE option. But if you are more like a swing trader, then you might want to look at, hey, what's going to happen at the end of the month, or what's going to happen in the next monthly expiration. So you can actually look at these charts too. Then you can look at the swing model. So as we see, you know, this is the swing model. This was for the 31st. So we see like on that day, we saw a bullish bias there. We also have a 20-day swing model there. The matrix, this is the one that we showed you. So again, open it up, you know, read through it, look at the different data sets, look at, you know, the levels for the expiration. And then obviously you can look at more advanced model like volume and open interest, for 0 DTE, you know, net delta. So there's a lot of other models that we have. And then obviously the skew is very important. This tells you, is the market buying more calls or put? Like, is the implied volatility of calls and put increasing, and so on. So that can give you like an idea of the sentiment and how like you should look at the market. And then obviously term structure. Then you can go back in time. So for example, here we see the history. We can go back in time and see the past data, but we can also do it through the bot. So we can go on the bot here and look at our net jacks, and then scroll back and see, for example, the change in time. So as we can see, we see a big pile of negative gamma exposure in the recent days. A lot of it on the first, but if we go back to the 31st, we see we have a lot of positive gamma there. Let me know if that answers your question.